Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, March 22nd, 2023. I am Frank Ochoa, aka PivotBoss. It is Fed Day today. FOMC statement and the rate decision at 1 o'clock p.m. Central Time. We also have the FOMC press conference that follows 30 minutes later. We could be looking at range-bound price action throughout much of the day until late this afternoon, where we'll start to see perhaps some sort of push away from the FOMC statement price. At that point, we'll have ourselves some new key levels, FOMC key levels that we can use moving forward. But right now, you can see here in the ES here, you have about 21% of average daily range and a range of just 19 points. 19 points of range, so super compressed. This compression also happening above the previous week's high, as is in the case in the NQ and the YM. Potential box reversals developing there in case of a failure. So if there is a failure to hold the previous week's high here, later in the day we could be rotating back toward the previous week's close and midpoint up ahead. So the ES right now holding at these highs, awaiting the FOMC, waiting the statement and the rate decision here. And for the most part, we're looking for potentially a push to the upside that could take you as high as 40.85 in this zone, but a failure there could just bring us right back down. Ever since falling back off the previous month's midpoint, new lows, we're still in a downtrend until that zone right there is reclaimed. So still kind of an upward push at the moment, but a failure holds a previous week's mid high could open up a return to the previous week's mid. Here, let's take a look here at the NQ. The NQ is trading 26% of average range right now, sitting near the highs of recent price action. Again, this lower high right here got prices to a new low, and then a lower low failure, and now prices pushed well beyond the previous month's midpoint and is stretching for the previous month's high price right now. Again, we could look at a continuation toward that level here up ahead, but really it's what happens through 13K. Can price push through 13K here and open up the next zone above into about 13.8? If not, we could be looking at another failure. We rotate back down and we're still inside this distribution. So right now, as the market has tested this edge and reversed back to the opposite edge, how's price going to respond at this edge? Again, a failure to hold the previous week's high price at 12.8 would be an indication that we may be about to rotate 500 points down back toward 12.3 and perhaps back across the previous week's range at 11.8. As of right now, again, a test at 13K looks likely here up ahead, but if it can't push through that zone, again, do we rotate all the way across the prior range? So keeping an eye on this edge. If we take a look here at crude oil, you'll notice right now crude oil trading 69.69. So below that 70 price here. Price dropped here recently, getting as low as 64s. You'll notice right here, this is the previous year's low, previous year's close, and after dropping off that 80-50 level, the one we talked about before as a target, and then watch that area for a rotation back down, it was not able to hold 72s here on this big day. You had almost the beginnings here of a rejection, but the next day it falls through that zone and drops through the previous year's low. So now you have this price action here. Can price reclaim the 70 level there? Can this market get back above 70? If so, again, 80.5 would be the next level, and that may look something like this. Pull back and go. Could be ahead. So keeping an eye on 70, because a failure to get back above 70 would be the first indication that we may be looking at lower lows up ahead. But 64 right now, a big level here to hit. It's the lowest we've seen since we hit 64s back in that 21 December time frame, 21 November, and that led to a big rally off that zone. So big time support down here, and if price can get back above 70, there could be a 10 handle rally back toward 80.5 in the best case scenario. Taking a look here at gold right now, you'll notice that gold got a rejection here of prices above 2,000, and 2,000 has been the area where this thing has finally been able to see resistance over the last couple of years. You can see how significant the LVN is there. You can see how hard the rejection is on a higher high failure. stop run day in the prior day, and now we have a very narrow range of 30% of average range heading into today's Fed day. If you look back over time, again, over the last several years, this is about as high as price will go before it starts to see some reaction. There's that 2000 level. You can see you get a little bit higher at times, but it's been a level that has seen quite a bit of rejection here recently. So to see another reaction like that, especially on a higher high, that could lead prices again back to kind of that midline down below, which has been 1830. 1830 has been the previous year's close 2 years running, and that could be a magnet back below on such a hard reaction at 2000. It's happened over the course of the last few years. We may very well see that happen yet again. In some scenario down the road, if we are able to see explosive breakout through that upper edge of this range, that could open up at least a rotation back toward 2100 on the high end. But can price get beyond that to really see further expansion? As of right now, quite a hard reaction of prices above 2000. Ultimately, 1830 could be a target below if price cannot get through 2000 sooner than later. Lastly, taking a look here at the YM. The YM has developed a very narrow range here above the previous week's high price. A little bit of a box developing up here, so a box reversal could be in play. A failure to hold that 32,600 level, which is the previous week's high price right there, would suggest a rotation back to the previous week's mid and close down below, which takes you to about 32K, 32,100, somewhere in that zone. So again, right now, downtrending market overall. We're at that counter trend edge. Box reversal potentially in play. If the market can't hold 32.6, you start to see a rotation back down within this range. Overall, this market has had a pretty solid reaction here over the last several days off this lower edge here. But right now, testing the upper edge of a downtrending channel. So the primary trend coming into play here. Can price push through and open up some upside, or do we rotate back down as has been the case usually? So keeping an eye right now on the previous week's high price. Failure to hold that zone starts to rotate you back down. And again, keep in mind, this market has continued to see lower highs. After breaking the rounded top to the downside, this would be a retest of that zone, 33K, very important. That's going to be the level of emphasis. If it can get through 33K, it could open up and move back toward 35.5. A failure or a massive rejection of prices above 33K, and we're rotating back down within the range. All right, that is it for now. We'll see how this plays out heading into the Fed later on this afternoon. Everyone have a fantastic rest of your day, and I'll see you in the trading room. Take care.